Hello, good morning, buenos dias, agonon. Welcome back for day 2 of Energy Tech Summit 2026. I hope you had a great first day, and we're full of energy to go again for this second day. We've got a packed agenda ahead, so we won't spend too much time getting into it. But first, we do need to begin by thanking our sponsors for making all of this happen and for joining us on this journey. Our main partner is BBVA, our startup innovation partner, ABB, our platinum sponsor, Corinex, our gold sponsors, European Investment Bank, Acario Innovation, Siemens Energy, Terabase, and Equinix, our silver sponsors, Junction Growth Investors, Connect Point, Compass VC, 11S, Aramco Ventures, SC Ventures, Ente Vasco de la Energía, Honda Innovations, Go Cardless, EDP Ventures, University of Built Environment, Axpo, Stiefel, Invent Capital, Tilt Capital, Eluit, Eneco, Necture, Carbon Direct Capital, and LCP Delta. Our startup pavilion sponsors, SQM, Clean Energy Ventures, EDF, Pulse Ventures, Prosemino, Future Energy Ventures, and Sabanci Climate Ventures. Our startup sponsors, Hydrosat, Renewable, X-Fuel, Cartesian, Blixt, Tulum Energy, 1S1 Energy, Nordic Nano, Arkansite, Renow Energy, Ucaneo, Carrar, ITA World, Solar Innertech, DCRBN, Nobile NIG, Power to Hydrogen, General Fusion, Jolt Solutions, Plasma Leap, Flower, Hydrogen Memtech, CleanWatts Digital, Watt Analytics, Elysian Aircraft, Vertoro, Gridio, Nextdash, Autonomy, Carbon Upcycling, Queen's Carbon, Electrified Thermal Solutions, Altilium, Clean Technology, Voc Bikes, Current, Reenergize, IR Power, Ocean Information Services, RevTerra, Stoff2, Yama, Earth Pulse, Ecogen, Eco Global, Plexigrid, and Heat. Thank you for partnering with Energy Tech Summit. Today, later on in the day, we'll be hosting the grand finale of Energy Tech Challenges, our annual startup pitch battle, spotlighting companies pushing the boundaries in our energy industry. You'll see a lineup of bold startups pitching live on this stage, so make sure you stick around for that this afternoon. All that said, let's begin the day. Let's get started. And to begin, I'd like to invite to the stage Talmon Marco, co-founder and chairman of the board at H2 Pro, and Juliana Garaizar, partner at Energybackers. They'll be joining us here on stage for a fireside chat on raising the bar and the capital from startup to scale up, turning volatility into opportunity. Let's give them a round of applause and welcome them to the stage. Thank you.
My own.
Oh, you're on your own.
Yes, I'm waiting for Talmon. I don't know where he is. He was around. Do you have his phone?
I don't have his phone, but I know someone does.
Let me see. We said we would start 5 minutes late, but
Apologies and bear with us whilst we find Talmon for this first talk.
gonna ask Dominica maybe. Okay, let's get started. Sorry about that. It's Friday, so bear with us. We just have like 5 minutes less. No, but we'll try to make it short. So, Talmon, tell us a little bit about yourself. How did you end up in Viber, creating Viber, and then the big jump from software to hydrogen? This is a fascinating story. Why don't you tell us the motivations behind all of that?
So by background, I'm a software guy. Most of my experience has been with B2C, consumer internet software. And after a few of these that did okay, I and my partners figured out that we wanted to do something that made the world better. And that's how we ended up in this business, in this hydrogen business. But it was quite a ride. It still is.
So how did you meet your co-founder at H2 Pro? Was it like, did you work previously with him? How did it work?
We actively looked for a project that was both interesting, challenging, and had a real chance of having an impact, a positive impact on the world as far as climate is concerned.
So you knew you wanted to do climate after Viber?
Yes.
And why hydrogen?
Hydrogen is one of these tools in our overall toolbox that can have a significant impact on global emissions. So you have a few of these. So you look at electrification, electric cars, electric this, electric that. Hydrogen can have a double-digit percentage-wise impact on emissions.
So tell us a little bit more about H2 Pro. What are the key differentiators?
H2 Pro, a lot of people say we're waiting for the hydrogen market to happen.
Yeah.
It's still not there, it's still not there. At H2 Pro, our thesis is different. We say that the hydrogen market is here. It just is the wrong kind of hydrogen. It's gray hydrogen, or if you're looking at China, it's black hydrogen. The only reason, and it's a pretty big only, is that green hydrogen is amazingly expensive.
Yeah.
If green hydrogen was at a couple of dollars, then there would be no issue. Nobody would be using gray hydrogen. For green hydrogen to reach price parity with gray or black hydrogen, what you need is to look at your feedstock, at electricity. And if you say that, let's say, 50 kilowatt hours of electricity is what you need for a kilogram of hydrogen, then ignore your capex. You need to look at what is the cost of my feedstock. And if you're looking at grid electricity and the cost per kilowatt hour, say it's 8 cents, 10 cents, 15 cents, depending where, and you multiply by 50, you're already way more expensive than gray hydrogen. So the first thing you have to do is say, like, okay, where do I get cheap electricity?
Yeah.
And the answer is you need to be behind the meter. You need to connect directly to ultra cheap renewables. So primarily solar. How do you get to 1.5 cents, 2 cents, 2.5 cents per kilowatt hour? And the way to do that is, as I said, go behind the meter. The problem with going behind the meter is that electricity is not reliable, it's intermittent, and electrolyzers don't work well with that. Electrolyzer like a stable supply of electricity, 24/7, small variation. And at H2 Pro, and I'm gonna, do some self-propaganda.
Of course, that's why we're here.
What we do is we build from the ground up an electrolyzer that can actually work with intermittent energy. I mean, if you look at the way it works, it goes up and down all the time anyway, even if it's grid-supplied electricity.
So what is the stage of the electrolyzer? Is it fully built, or do you need capital to? Where are you at in the stage of H2 Pro?
Startups always need capital. We deployed a 0.5 megawatt system, so it's not tiny, it's not huge. And we're going to build a 5 megawatt system next.
So where is the first deployment? Where are you going to build the next one?
The next one is actually going to be here in Spain.
Good.
In a place called Trojelianus. I hope I'm not overly butchering the name. And then we'll take that. It's a 5 megawatt that's going to go to 25 megawatt. And yeah, we will start now to raise capital. We haven't done that in 5 years. So
Okay.
we might as well do it now.
So how does Viber compare to H2 Pro in terms of, raising capital, in terms of, the volatility? You mentioned that you haven't raised capital for 5 years. Was that the same thing for a software versus a hardware company?
At Viber, we also didn't raise money for 5 years because the whole project was shorter.
Yeah.
And we were fortunate enough not to raise money at all over there. It was funded out of pocket. But the time scales, everything is much longer. You need far more patience with the climate tech, deep tech kind of an endeavor. So with software, you have an issue, like, okay, why can't we fix it today? Why do we have to wait until tomorrow? And over here, it's, can we do it in 1 year instead of 2? The scale is very, very different.
So what kind of VCs or investors do you have in your cap table? And how important it is to have corporate partners who know about the industry? Who are your partners in this new endeavor?
First of all, we have some of the most amazing investors, just both in terms of who they are and how they support us. Our largest shareholder is Breakthrough Energy, Bill Gates' climate fund, Temasek from Singapore, Horizon Ventures, and the list goes on and on. Some very powerful, very supportive, and deep-pocketed investors. If you're looking at the kind of investors that you need investors that are more patient, that in many cases, these companies have investors that are not pure play financials, more patient, but also the payday should eventually be greater because climate tech is suffering in the last few years a bit of a delay with the change in the administration back in the US. Europe is not progressing as was expected. China is moving really fast, also on climate. So things are a little slower, but things that need to happen will happen. So we are going to decarbonize our economy globally. There's no doubt about it. Whether you look at electric cars that were slowing down, but it is happening. If you have manufacturers that decided to stick to internal combustion because it's selling now, so yeah, the CEO is going to make the next quarter bonus, but the company will die. So you're mortgaging your future. And we need to understand that across the board.
So have you changed your messaging now that things are changing in the US? There was a big bump with hydrogen and the hydrogen hubs in the US with the IRA. All of these things are slowing down. We're no longer talking, at least in the US, about net zero. We're talking more about energy security and abundance. Are you changing your messaging when you are trying to raise money, or are the time schedules longer? Are you going to need to raise more money, or how is everything changing because of this delays and this change in narrative for the hydrogen sector?
I think the cancellation or the adjustments of the IRA coupled with things slowing down in Europe and overall globally when it comes to climate companies, and not just hydrogen, but across the board, is unfortunate. As far as our messaging is concerned, our core messaging hasn't changed, okay? We're still doing something for the climate, we're decarbonizing. We always spoke about renewable energy being the fundamental source of energy for hydrogen. But at the same time, we're also realizing that we need to augment the message with energy security. And yes, if you're China, for example, then and the Straits of Hormuz have been blocked by the good people of the IRGC, then and I'm not serious about them being good people. Don't anybody quote me about that. Then energy security all of a sudden becomes an issue. If the Saudis had the pipeline, whether with hydrogen or with oil, an additional pipeline, then this would have been less of an issue. So, energy security is an issue. Energy security has always been an issue, but between this and between Putin's special military operation in Ukraine, then
So tell us more about, the differences in raising capital. When with software, the VC model works really well, right? You get money, you exit the company fast, but with a hardware company, you raise VC first, and then you're starting to build plants bigger. So that's when you get into potential debt, project finance. How are you planning the new capital stack when you have more and more infrastructure that is going to happen for your hydrogen catalyst?
I think first and foremost, it's more difficult. The investor pool for climate, for hydrogen is smaller. And yes, you have to look at fundraising, get money on your balance sheet. You need to look at debt. You need to look at project financing. You need to look at grants. It's just more complicated. But that's part of what you do. In a software company, I would walk into the room and I would probably leave with a check. And they would probably then ask you what you plan on doing. Here, you have to work harder, but harder also makes it more interesting.
Yeah, that's a challenge, right, for you?
Yeah.
So why Spain in this next phase? Is it because the investors are here? Is it because this is the cheapest renewable energy?
When you look at the map and you want to deploy solar, you're probably not going to do this in northern Finland. So Spain has been blessed with a lot of solar irradiation. The environment around solar, around renewable, around hydrogen is favorable in Spain. And we found good partners here. It's a good place for our kind of business in Europe. It's not the only place, but this is a very good place.
And you're planning what are the next phases of, first is how many megawatts, and then you want to continue in Spain or over Europe? What are your plans?
First step is, this is a 100 megawatt solar deployment, which we're doing together with Doral. It's a large solar developer operating primarily in the US. In that 100 megawatt solar, we're going to start by deploying 5 megawatt electrolyzer, which will grow into 25. So it's 2 stages. And the thing about that solar deployment, it's a stranded asset. They can't connect to the grid. And we're seeing more and more of that, not just here, also in the States and elsewhere. The grid is the bottleneck. So with hydrogen, you can actually release this resource and plug it into the grid. I think that when you look at hydrogen today, then you have a pipe, a natural gas pipe that leads to, let's say, a refinery. And over there, they turn that natural gas into hydrogen. With green hydrogen, you're going to have solar, primarily solar, I think, being turned into hydrogen on site. They're going to be coupled. And then you're going to have a pipeline of hydrogen. And this is getting deployed somewhat slowly, but it's still happening in Europe, a whole hydrogen grid. And that will lead whether to a refinery or someplace doing ammonia or some other industry like steel.
So have your plans for expansion in the U.S. changed because of politics, or is it because your partner is very well established in the U.S.? Do you see the expansion happening there?
I think we are taking a step back in the U.S. The hydrogen industry is deeply reliant at this point in time on subsidies, as was the solar industry for 20 odd years. And once we scaled up, once prices are low enough, or there's a new administration or things change in the US maybe earlier, then we'll be in a better position to go back and do meaningful things stateside.
Okay, so tell us some words of wisdom, words of advice for some of the entrepreneurs here. We had a lot of pitch competitions. A lot of the companies here have been pitching for money, pitching for connections. What would you recommend for the entrepreneurs here who are maybe trying to get to where you are and navigate a more uncertain environment like you are?
First of all, go to the local Starbucks and buy a big cup of patience, because you're going to need it. The other thing, in terms of fundraising, be truthful, or as truthful as you can be, right? You can say the things that you don't know, but the things that you do know, be realistic about it. Don't overpromise. That would be one advice. The second advice would be, if you can raise money, raise as much as you can. You can never raise too much money, and don't run the games of, but I'm going to get too diluted, so I'm going to postpone it. We were fortunate enough that we raised far more money than we needed back in 2021, and we're still spending that money today, and a lot of it is still in the bank. The other advice that I would give is get engineering on board early, pretty much on day one. It's not a science project, it's not a pure technology project. Get engineering. We were fortunate enough to have to bring on board early on, though not early enough, an amazing engineering guy who's now our CEO. He's sitting here. I wish I did that 2 years or 3 years earlier.
You would have saved a lot of headaches.
And money.
And money.
Yes, absolutely. It would have been, because that really delayed us. So when we look, a company is now 7 years old, things would have moved faster. We they say, move fast and break things. We definitely broke a lot of things early on. I'm happy to say that from a technology standpoint, we are on the right track. Things are working, but this took a while.
So what does an exit look like for a hard tech, deep tech company compared to a software company? How do you see the exit for these investors that you have on board?
Right now, our focus is really not on the exit. We're still at the entrance to this space. But look, there are three
What is
ways.
a dream for H2 Pro?
There are three ways of exiting. You sell, you go public, or you go bankrupt. So you probably don't want to take the third door. For H2 Pro, I think for any company, if you're building a company for sale, and that sale doesn't happen, you have a problem. Not to say that you're screwed. So you don't want to build a company for sale. You want to build a company to grow, to be independent, to go public, which is just a step in that direction. So the way we build it, we are building a big independent company, or that's what we're trying to build.
Perfect. Okay, a huge round of applause and good luck with H2 Pro.
Thank you very much.
Talmon. Thank you.
Thank you very much.